Okay, welcome everyone. We're going to get started. Sorry for that delay. It took me some time to properly set up the screen share so we can go through this presentation. Thank you for attending. We are recording, so I want to respect everyone's time. I think we're going to be about maybe 17 to 20 minutes max here, so that's good. Then we can have some Q&A if there's a need for that. Otherwise, during the presentation, I won't be stopping for audio questions. However, you can hit my colleagues, Lamar and Sylviana, in the chat if you have any direct questions regarding related to the content as I'm moving along. Just go ahead and type your questions, and they should be able to respond to you relatively quickly. So this is a presentation presented by the Russell Realty Group of Berkshire Hathaway HomeServices, Elite Real Estate in Sacramento. The purpose is to attract investors for our new program. It is the guaranteed short-term ROI program related to veterans and VA loan approved buyers and VA loan options. So let's go ahead and dive into it. So our purpose, pretty simple. We created this unique investment platform to leverage investor resources, capital, on behalf of VA-approved homebuyers while ensuring a favorable short-term return for our investors at the same time. You'll see why here in a moment. So the problem, as with any great innovation, generally comes out of necessity. The problem is something that we discovered as we were working with our VA-approved home buyers and trying to get them settled into homes. VA is a restrictive program. It's a great benefit for U.S. veterans to be able to use their VA loan benefit to purchase a home for their family, but it's not always a seamless process. And sometimes it's ultimately so restrictive that it's limiting. U.S. veteran home buyers are often priced out of the market related to normal inventory assets. Their VA benefit cannot be used where even a minimal amount of rehab is needed. And that's the problem right there, is the restrictiveness of the program limits an already limited inventory pool. Our program remedies this misfortune for sure. The solution: we leverage the capital resources of our investors, providing them an above status quo return, interim cash flow, mitigated risk, and a definitive exit strategy. Through the program, we're acquiring and rehabbing modestly subpar assets. So these are assets that don't meet that restrictive VA protocol or standard. And then we're integrating VA loan approved buyers to purchase these assets, which now, at the end of this process, do meet the VA standards. So who are we? Who's steering this ship? Our team. As I said at the outset, we're the Russell Realty Group of Berkshire Hathaway HomeServices, Elite Real Estate here in Sacramento, California. We are a joint real estate and mortgage team. We do in our operation both real estate and mortgage. The team consists of about 50 licensed realtors, 15 active NMLS licensed mortgage loan originators. As you can see by the logos on this slide, we operate the real estate licensees in affiliation with Berkshire Hathaway HomeServices. And the mortgage operation is operating under Elite Mortgage and a subsidiary or division of Elite Mortgage, Pacific Wholesale Mortgage, PWM. Our investment, project management, finance, and commercial real estate expertise is second to none. We really know what we're doing here. We're good at this, as the initial point there or bullet says. No joint real estate mortgage team closes more VA loan home purchases in our market. We stand by that. So let's get to the program. As I said, this is really innovative. We have a lot of pride in having created this program. I should have said from the outset, there's nothing wrong with having a socially conscious outcome be mutually beneficial and even profitable for those involved. There's nothing wrong with that, and that's what we've done. We've got a win-win where our VA approved veteran buyers are able to employ their VA loan benefit and get into a home, get their family into a home through the program, and our investors are going to come out quite well in the end as well. It's a simple program, 3 phases. We acquire in phase 1, we rehab and institute a lease in phase 2. In phase 3, we transfer and execute the disposition or purchase of the asset after the rehab. Then we're on to the next. Let me break down those 3 phases for you. Acquisition first. So investor capitalizes the acquisition of an identified VA deficient SFR, or single family home. So what we're looking for is essentially modest or light fixers, somewhat cosmetic, like clearances, pests, wood, dry rot, things like that, exterior. And we look to keep the, put a max on the subsequent investment or capital needed for rehab at about 10%. So let me give you some numbers. I know we're all investors, we like numbers, particularly plump round ones. So let's just say we find an asset, we have an asset in inventory identified for one of our buyers. It's $350,000. However, due to $4,500 termite clearance, maybe $1,500 dry rot clearance, a $2,200 paint job, some work in the front lawn or the exterior just in general. We've got some added expense. And for those reasons, this home cannot qualify under the VA loan standards. So it is as I said here in the bullet, a VA deficient SFR, meaning this is a good home. There's nothing wrong with it, but for some light cosmetic rehab and subsequent investment, it does not meet VA standards. So our VA approved buyer cannot use their benefit to buy this home. This program remedies that. So we're talking about, as I said, let's get some real numbers. Let's say it's a $350,000 asset we found not meeting VA standards presently. Let's cap the maximum subsequent capital required at 10% or $35,000. So as an investor, you're into this property, $385,000, at the end of which it may, hit the median or be at a value of $450,000. But the point being, that's a mighty profit for you in a short-term turnaround. And now the home meets VA standards, and our buyer, a U.S. veteran approved under the VA loan program, can now acquire this program with their VA benefit and move their family into the finished home. So the investor liquidity for cash purchase is optimal. That's not to say that it can't be financed, but that would be, for a fixer, most likely a conventional mortgage with a 20 to 25% down payment requirement or necessity possibly. So ultimately, we like to have this move along with investor capital being liquid for the purchase and the subsequent investment. So that would be $385,000 or less in this case, going along with my previous hypothetical. The next phase, as the rehab is being done, so after we close escrow on the initial purchase, we're going to initiate that light cosmetic rehab, put that subsequent capital to use and start getting the property ready to meet the VA standard. During that time, though, we will be executing a lease with our VA-approved homebuyer. So they're going to execute a 90-day lease at FMR, or fair market rent rate. They're going to live in the home, which is one of the reasons we like to, as we're identifying inventory targets for this program, we like to keep those modest and moderate repairs and clearances to the exterior whenever possible, so that the home buyer can move into the home under that 90-day lease. So they're already taking possession. They've already made a commitment. They've already committed to move in and make this property their home, but they can't do so under the VA benefits, so we have the 90-day lease. It's a normal lease. It's going to be a short 90-day term, and that's not an accident. The reality is that it's 90 days is the minimum required post-rehab time frame per VA guidelines, so it has to be 90 days. Can't be any less than 90 days. So we execute a 90-day lease. During that time period, the investor is the sole beneficiary of the interim cash flow. Let me check the waiting room. I think we have maybe some people waiting to get in. Give me one moment. Okay, I think we're good. Okay, let me pick that up where I left off. So we're in the rehab phase. We've executed a 90-day lease, which again is the minimum time frame, so there's no real choice in that. And during that time, the 3 months of rent, the investor is the sole beneficiary of that interim cash flow. So you're going to have interim cash flow. The VA buyer, now tenant, is subject to a deposit like any other lease. That deposit's going to be their move-in deposit. And at the end of the rehab and lease phase, you'll see what happens to that deposit in the ultimate benefit of the transaction. The rehab expense, as we've been saying, is limited to 10%, typically limited to minor to moderate external clearances. I think we covered that. So let's move on to phase 3. So we've got some visualization here for you. It's simple, but I think pretty telling and accurate. So you look at the home on the left. In that state, that's how we're going to acquire it in phase 1. And you see the after image there is going to be what the home's going to look like at the conclusion of the 90-day rehab and lease phase. So basically, it's just been cosmetically improved. There's no telling from this image, if any interior work was done. But again, we're talking about light clearances, maybe some roof patch work, and then just cosmetic and aesthetic beautification of the outside, the exterior, curb appeal. And you can see here in this case, they've even actually reshaped the driveway. So it's things of that nature, but again, limited to that 10% subsequent capital requirement or necessity. Transfer and purchase. This is the good part where everyone really realizes the benefit and the payoff of the program ultimately. At the conclusion of the lease and rehab phase, our investor and VA buyer to execute an RPA, residential purchase agreement, at present market value. So that's going to be the, not the before, but the after market value of this home. Again, as I said in my hypothetical, we bought it at $350, put a maximum of $35 into it, and maybe we hit the median value for the area, let's say that's $450,000. That's going to be that value. So the RPA between the tenant, now buyer, and you, our investor, is going to be for that aftermarket value, after repair market value at hypothetically $450 for the example. The lease phase deposit will then transfer as EMD for our buyer in the new escrow. It will also go to apply toward closing cost and just to get the deal done, but it's going to be transferred directly into escrow for that purpose. Elite Mortgage, our mortgage arm, will be facilitating the purchase under a VA loan. So we're VA mortgage experts at Elite, and that will be the loan officer and the entity handling the VA mortgage to close this part of the deal. As I said, it's pretty simple, very straightforward. But let's talk about what you're all wanting to hear as investors, and that's how do we mitigate the risk? How do we guarantee the return? And we've got several factors impacting risk in a positive way. The first one, obviously, in the acquisition phase, we're not buying at market value. These are subpar properties, albeit slightly, but they're still subpar. So we're not paying market value for these homes, for these, for these assets. Investor equity is assured by the nature of the below market acquisition. So again, there's instant equity there that's built in because we're going to negotiate below market. And, you know, another thing that I should add on there is, you know, it can't be guaranteed, of course, but there are going to be some instances where for some of those clearances and some of the work needed, we're going to be able to secure seller credit to further mitigate, as an investor, to further mitigate that subsequent capital necessity as we're rehabbing the home. You're going to be able to use some of that credit from the seller in some instances, I would imagine, to make those clearances and improvements. So again, another risk mitigating factor is a 3-month cash flow during the lease phase. And that's notable, it's noteworthy. When you think about a normal flip and fix, or fix and flip, sorry, you're usually paying carry costs for your debt finance. Maybe it's hard money, whatever it may be. But while you're in there hammering and banging it out, you're not earning any cash flow. There's no interim cash flow. In fact, quite the opposite. There's generally liability in this phase of a fix and flip. Under our program, you're actually going to be earning cash. There's going to be interim cash flow and revenue during the rehab phase. Transfer and purchase phase. Close of escrow, we're mitigating, again, if you do have any carry costs, let's say it was a debt finance scenario, we're going to keep it short. It is a short-term return program. Close of escrow is going to be approximately 120 days from the initial acquisition. We're going to acquire, we're going to begin that lease and rehab phase, which again, for VA, per VA guidelines, has to be 90 days at a minimum. And then we're going to put, you know, some time on the end of that to close the VA loan within 20 to 30 days. So just kind of capping out your total expected term of the investment at 120 days. Investor to realize or recoup your initial capital investment plus gains via the sale at market value. Again, we covered that in the first bullet, but again, there it is. Your investment is assured in the initial capital investment, and you get the gains of the interim cash flow and then the equity that was built in from the initial acquisition. Okay, so here in the event of, we got to have some in the event of bullets here, because I know you're all thinking these things as smart investors. So in the event the VA approved buyer cannot or does not want to or purchase at the conclusion of the 90-day lease and rehab phase, the buyer lease phase deposit will revert in part to the investor. So there will be a withdrawal under penalty for the VA buyer. What percentage that will be, that's to be determined. It's probably going to be a factor of you know, what the overall purchase price was, how large the deposit was, how large the transaction was to be. But just know that as an investor, you are protected for, in that regard, that you will get part of that deposit that transferred over, or that was going to transfer over into the new escrow. And then you're still getting the benefit of the ultimate sale and transfer, because we'll find another, we'll use another of our VA approved buyers, which we do have several. So we'll just insert another buyer in there for you, and we'll still dispose of the asset to your benefit. You'll still sell the property. You'll realize the gains of the current market value. You've already pocketed the interim cash flow from the rental. So it's still a win-win. We just move forward with a different buyer. Nothing lost. Investor capital investment limited to acquisition plus 10%. We will not exceed that. So in other words, if a home requires initial acquisition capital plus 20%, we'll pass. There's enough inventory out there for us to where we can execute and adhere to the parameters of this program. Guaranteed fix and flip with minimized risk and maximized return. That is what we are talking about here. Guaranteed fix and flip with minimized risk and maximized return. So that's it. I know it was short, but that's the way we wanted to keep it. Listen, this is happening now. We have VA-approved buyers and inventory that fits the parameters right now. We're looking for interested and capable investors. If that's you and you fit that bill, please contact us today, and here's how. Guaranteed short-term ROI. Again, lender-approved exit strategy, mitigated risk with high yields, interim cash flow, and this program is socially conscious element. As I said, it directly benefits our U.S. veterans and their ability to use their rightfully given VA benefit to purchase a home for their family. So let's help make that happen. Again, nothing wrong with putting some profit in your pockets as we do so. But again, this is the program. We're proud about it, we're excited about it, and we're looking for qualified investors. Please reach out today to either of my colleagues, Silviana or Lamar. You can call directly using the toll-free number, 855-400-EASY or 3279. And we'd love to hear from you. If you have any questions, you can email those questions, call those questions if you weren't able to get them into the chat. And we'll take care of addressing your questions as we get them. But bottom line, just talk to us. If you just want to get some more insight and information on the program, we're happy to do that directly, one-on-one. We just want to hear from you. Thank you. Again, I've been Dameon Russell with the Russell Realty Group of Berkshire Hathaway Home Services, Elite Real Estate in Sacramento.